So about the copper market, I mean, I get a lot of questions about where's copper going, and I think it's just going up. And the big reason for this is it's multifold. One of them is the global conversion of internal combustion cars to electric cars. If you look at the amount of copper in an electric car versus that in a traditional ICE, you go from roughly 20 to 50 pounds in an ICE to over 180 pounds in an electric car. And if we look at the global market, there's roughly 80 million vehicles produced and sold every year globally. And if we look over the next 10 years at a 50% penetration, so we convert 50% of those ICEs to electric, we're looking 40 million vehicles. So that's over 5.2 billion pounds of copper. Now, to put that in perspective, the global market for copper right now is roughly 53 billion pounds. So if you just look at the at vehicles alone at a 50% penetration, that's a 10% increase in the global usage of copper. Now, that's just one aspect of where we see copper going. If you add on to that energy storage, if you add on to that other forms of transportation such as trains, boats, and even airplanes, which I think eventually we're going to see more and more electrification. I don't know if we're ever going to get to full-size jets being electrified, but you're going to see smaller commuter planes electrified, and in every case it means a significant increase in copper.
The energy transition, decarbonization theme, I think is bullish for all industrial metals, and I think the outlook for the coming decades does seem to be very positive for prices, in the sense that demand is going to be driving metals higher. Intensity of use arguments would also see metals demand moving higher, and COVID and ESG issues, if anything, look to have accelerated some of those themes and drivers that we had in place now for a few years. The flip side of the coin is that as demand rises for copper, aluminum, nickel, and so on, we need to incentivize mining companies to meet that rising demand with new supply or expanding existing supply. And therefore, we need metal prices to be above certain levels. For example, $7,000 a ton copper, $16,000 a ton nickel, and perhaps $2,000 per ton aluminum, in order to provide an incentive for it to be viable for mining companies to expand capacity and build new capacity in jurisdictions that perhaps are going to be more difficult in terms of political risk, lack of infrastructure, or deposits lower grade, deeper down in the Earth's surface.
I think the premise that that copper will lead, or will give us an indication about the strength of the economy, is still going to hold. I mean, one of the questions about it is that we do, as we go to a green economy, how good of an indicator it's going to be, and I think that's still an open question. But I don't think you have to rely on that. I think we're going there anyways.
Yeah, I think, Dr. Copper's been a reasonably good indicator in the past, and been a good indicator this year, bearing in mind that copper was close to $4,000 a ton in the crisis during March, and has almost doubled in that time. Coincident with the recovery in the global economies, the PMIs, global GDP have bounced back quite convincingly, and there's more room to come on the upside. People have been talking about iron ore, though, as perhaps being a competitor to Dr. Copper, because that's increased a lot more than most of the base metals. So maybe iron ore, because it's more linked to the Chinese economy in terms of infrastructure, rebar consumption, obviously, going great steam in China, whereas copper perhaps is more linked to the Western world economies of industrialization, consumer demand. So maybe we should have both Dr. Copper and Dr. Iron, perhaps, or maybe
nurse iron,
or
Dr.
nurse iron, or even psychiatrist iron. To I think the market teaches us many things, and I think one of the takeaways is not just to look at one indicator, but trying to look at many as possible. So why not Dr. Copper? Why not nurse iron? Why not psychiatrist aluminium, if you like? So yeah, I think we need to broaden the analysis and look at a wealth of indicators.
Well, there's good and bad to it. It increases costs, our costs for production and exploration. But it's not. I mean, the way the price action on copper is gone, I don't think it's going to be a significant impediment. Everybody in our sector is very bullish on the metal, and you just have to budget those increased costs into your plans.